Hello dear traders, I'm Anna Kasatkina and you're watching Weekly Financial Review on Insta TV. Major US stock indices ended Friday trading around 2-month highs, largely due to a rally in stocks of energy and commodity companies. Strong data from the US labor market raised expectations for at least one more rate hike by the Federal Reserve this year. Stocks of financial companies revealed the strongest growth last week. Investors expected that stronger figures would make the Fed tighten monetary policy even further, which traditionally favors commercial banks. The Nasdaq Composite Index closed at 4,717.02 points, gaining 2.8% for the week. The Dow Jones Industrial Average climbed to 17,006.77 points last week. The Blue Chip Index rose by 2.2%. At the same time, S&P 500 showed a 2.7% increase, closing at 1,999.99 points. Meanwhile, stocks of energy companies expanded by 5.8% on Friday after crude oil futures surged by nearly 10%. Crude oil ended trading at multi-week highs, mostly due to the slower U.S. production and a possible output freeze by other major oil exporters. The U.S. economy generated 242,000 jobs in February, exceeding analysts' expectations for a smaller increase of 195,000. Moreover, the January figures were revised upwards. The data encouraged investors, but later they focused on a 0.1% decline in average hourly earnings reported for the last month. A gain of 0.2% had been anticipated. Besides, trading sentiment was also shaped by the U.S. trade balance data that reflected a tumble of 2.1% in exports and 1.3% in imports. Last week, Hewlett-Packard Enterprise released its earnings and revenue report that turned out to be better than Wall Street analysts had expected. Investors positively reacted to the information despite a 52% drop in income. The company's shares jumped by 14% over the Friday session. In the first fiscal quarter ending on the 31st of January 2016, Hewlett-Packard Enterprise net income totaled $267 million, or 15 cents per share, in comparison with $547 million, or 30 cents per share, reported a year ago. However, adjusted per share earnings amounted to 41 cents, 1 cent up from analysts' forecasts. Meanwhile, Carmike Cinemas Incorporated shares advanced by 16% on the news that American movie theater operator AMC Entertainment Holdings, a majority-owned subsidiary of Chinese conglomerate Dalian Wanda Group, agreed to buy Carmike Cinemas to create the largest cinema chain in the U.S. The deal is estimated at $1.1 billion, including debt. And this concludes the weekly review of financial markets on Insta TV. See you next week. Bye.